Good afternoon, everyone. It's 10 past 2 here in the UK. That's about 10 past 10 in the US. And I'm looking at VectorVest USA. I think that you can see quite easily that the number of declines is significantly higher than the number of advances, and that the buy-sell ratio, the number of shares on a buy recommendation divided by the number of shares on a sell recommendation, showing that the buy-sell ratio is right down at 0.02. That's as low as I can remember it in all the years I've been with VectorVest. So let's just have a look at the overall market. Certainly the advice is VectorVest does not advocate buying any stocks at this time. The primary wave is down. The underlying trend is down, and that underlying trend has been confirmed by 2 weeks price action. So all of the VectorVest metrics from short term to long term are definitely pointing down, and it's been like that for quite a while. Let's just have a look at the market. I'm looking at the VectorVest composite of the USA. This is over the last 6 months, folks, and I've superimposed a medium-term market timing system called the DEW, which I use for an awful lot of my trading. These signals are automatically put on the chart. No form of mathematics or calculations are required. Now, in the two windows below the price, I have the proprietary VectorVest market timing indicator. And the market timing indicator is a rate of change of the price of the VectorVest composite and the rate of change of the breadth of the market as measured by the buy-sell ratio, the number of shares on a buy divided by the number of shares on a sell. It's mathematically massaged between 0 and 2, and as you can see, it is below 1 at the moment, and anything below 1 means that the underlying trend is down. Above 1, the underlying trend is up. But there's some exceptionally good characteristics on this particular indicator, and the first characteristic is that in this last push to here, the MTI in fact couldn't make a new high. That's called by some people a failure swing. Some people call it bearish normal divergence, and a signal to sell which is preceded by this level of bearish divergence invariably produces a very strong sell-off. And I didn't expect for a moment it was going to be this strong, but nevertheless that's exactly what's happened. Now, probably more importantly, ladies and gentlemen, the green line study is the buy-sell ratio itself, which measures the number of shares on a buy divided by the number of shares on a sell. And again, we can see that although the price made a new high of the VectorVest composite, in fact, the buy-sell ratio couldn't get anywhere near that. And in this last little run-up that we had in February, the buy-sell ratio, in fact, was dead in the water. And I don't think you can do enough on market breadth in your analysis. When the signal came, and I marked by this little horizontal line the low, and in fact we came off very strongly indeed. I think that if you'd gone to cash there, you'd be feeling very happy indeed. If you'd hedged your portfolio there with options or with inverse exchange traded funds, you would in fact be very happy indeed. But what's more important is where are we now? Now, the market has sold off. As you can see, it's gapped down today, and I think that that's quite positive. You may not be feeling that positive at the moment, but it's quite positive because this gap at the top is what technicians refer to as a breakaway gap. And this could quite easily be an exhaustion gap. Now, I am always more optimistic than maybe I should be, but that exhaustion gap in fact makes me feel a little bit more optimistic than I was earlier. However, the MTI is falling, folks, and the price is falling. There's no divergence there. Now, let me try and illustrate divergence with a simple example. If you're in your car and you're speeding up with your foot on the petrol, there's a higher probability that you'll keep going than if you're slowing down with your foot in the brake. So at the moment, this trend to the downside is still speeding up. So I think we're still away from a turning point here. It could, in fact, even under the most positive circumstances, take quite a long time to bounce around this bottom before we get a turn. But the market is mega oversold. Now, at VectorVest, we have a gentleman called Todd Schaefer, who's the manager of research. And he tells me that if the MTI gets down below 0.6 on a scale between 0 and 2, and the buy-sell ratio gets down less than 0.25, then we're in a mega oversold situation. And ladies and gentlemen, it is my belief that we're coming close to that. We still need confirmation of a turn. The underlying trend at least must turn up, but I think that we're close to that. So I think that we're close to a major buying opportunity, a once in a lifetime, maybe not once in a lifetime, but the last time we had this level of a buying opportunity was in March the 9th, 2009. The sell-off is probably not over yet, and we need to wait for a similar signal to this to get us on board, and I assure you that VectorVest will print that signal when it has occurred. Just remember, these signals do not repaint. Once they're there, they're there. So it's time to sit and wait for that particular signal. But a buy signal from our DEW methodology, which is preceded by a mega oversold situation, I believe will be the buying opportunity of a decade. Now, I assure you that this fear that we're seeing at the moment will actually turn into greed in about 30 minutes if this market starts to move. I manage money professionally for a very long time, and I know to my cost that knowing when to start is really important. If you start at the right time, just after a mega oversold like this, and you make your clients 30%, if you have pullback of 10 or 15%, nobody much worries. If you start at the wrong time and you have pullback or drawdown of 10 or 15%, well, your clients will run for the door. So I believe that even if you're the most conservative investor and you employ the VectorVest worry-free methodology, which certainly in the UK has worked exceptionally well over the last 8 or 9 years, that it's going to be a really, really good time to start that methodology. We have two strategies that you could think of. Conservative people could employ our worry-free trading methodology, which focuses on the UK's and the US's safest shares. And of course, more aggressive traders could employ our bottom fishing techniques. We have an expert in bottom fishing at VectorVest by the name of Steve Chappell, and he's produced an exceptionally good course on how to actually find shares that will move strongly once the turn occurs. It's still too early, folks. And as I say to all the VectorVest people in the UK, doing nothing is much more difficult than it would seem. Where should this thing stop? Well, I'm going to pull up the S&P 500 because I think that we're, in fact, probably more used to those numbers. There is the low in June of last year, and this, I'm going to use a technique called Fibonacci, and if I do a Fibonacci retracement from the low to the high of a few weeks ago, the low on February the 28th, that's 78% retracement, an incredibly important number. The low on the February 28th, in fact, was that 78% retracement. We broke from there. If I just blow this up a little bit, and we rallied from there, and then we came down, we broke it. We then went back and kissed it, and we're now falling. Where are we going to follow to? Well, let's have a look. We need to look at a bigger range now. And we need to look from the low last January. And if I go back here, I can see that that's exactly where we are at the moment. So this is an exceptionally important level, and I think that a break up from here, which is still a long way away, is really, really possible, but we have to wait for the signal. If I go back to the previous chart of the VectorVest composite, as soon as this starts to turn, if this level holds, then we will print one of these signals. As you can see, the signals have been really good over the last 6 or 7 months. So time to sit and do nothing. I believe that we're entering a mega oversold situation, that we should see a significant bounce in the market. I think it's going to be a great time for both aggressive traders employing bottom fishing, and also an exceptionally good time to start a worry-free portfolio, but it's still too soon. So let's just chill and wait for the signal. And I'll say it again, doing nothing is much more difficult than it would seem. I hope this helps in some way. Thank you.